Are you planning to donate to charity in 2025, 2026, and going forward? Well, listen up. The tax code's getting a major overhaul, which could impact the benefits you get from donating to charity if you don't plan ahead. Today, I'm breaking down what's changing and going to give you a simple strategy you can use in 2025 to make sure you don't lose out on those benefits. Subscribe now to make sure you don't miss out on our upcoming videos on year-end tax planning moves and budget recommendations to make sure you're set up for a great 2026. In just a minute, I'll share an example of how making a donation in 2025 versus 2026 can save you a lot more money in taxes. And later, I'll go over the powerful strategy of using a donor-advised fund that many of our clients are implementing right now. So what's changing in 2026? The One Big Beautiful Bill Act was signed on July 4th, 2025, and it's bringing major changes into the treatment of charitable donations when it comes to your taxes. Let's start with the 0.5% AGI floor. Starting on January 1st, 2026, you can only deduct charitable donations that exceed 0.5% of your adjusted gross income. Think of this as a minimum threshold that you have to cross before your donations start to count against your taxes. Let me put it in plain English. If you make $200,000 a year in adjusted gross income, the first $1,000 in donations won't be tax deductible anymore. Only donations above that amount will count towards your taxes. Next is a 35% deduction cap. For those of you who are in the 37% tax bracket, your charitable deduction will now be capped at 35%, not 37% like it's currently. This means for every dollar that you donate, your benefits drop from 37 cents to 35 cents. These changes may seem small, but they can add up, especially if you're a generous giver. Let me show you how this works with a real world example. What we're gonna do is we're gonna compare the benefits of donating in 2025 to the same contributions in 2026. First, let's assume you have $500,000 of adjusted gross income and you donate $50,000 to charity. If you donate $50,000 in 2025 and you're in the 35% tax bracket, here's how it plays out. Your full $50,000 is deductible and your tax benefit will equate to $17,500. However, in 2026, the new rules apply. First, you lose the 0.5% AGI floor. So you're gonna take your $500,000 of AGI, apply the 0.5% floor, and you're gonna lose $2,500 in tax benefits. So that means only $47,500 of your donation is deductible. This equates to tax savings of $16,625. That's an $875 difference in your pocket just by donating in 2025 versus 2026. So if you plan on giving in 2026, it may make sense to accelerate those donations into 2025 so you can get the full benefits this year. Next, let's go into an example of even higher income tax earners to see how it impacts even more. For our higher income viewers, the stakes are even higher. Let's go over an example with a $5 million AGI earner who donates $1 million to charity. If you donate that $1 million in 2025, here's what happens. Your full $1 million is deductible, and at the 37% tax bracket, your tax savings are $370,000. However, if you wait until 2026, here's what happens. First, we have to apply the 0.5% of AGI floor. $5 million times 0.5% is $25,000. That means that only $975,000 of your contribution is deductible. Then your deduction value drops from 37% to 35%. When we use the $975,000 and the 35% cap, your tax savings are $341,250. That's a whopping $28,750 less in tax savings just by waiting a year. So now for the powerful tax strategy I promised. If you're planning on giving to charity over the next few years, it may be wise to consider a donor-advised fund. Here's how it works. You contribute multiple years worth of donations into a donor-advised fund in 2025. If you do this, your donations grow inside the donor-advised fund tax-free. Then, once your money is in the donor-advised fund, you can make donations to your charities whenever you want. This year, next year, and for years to come. By deploying this strategy this year in 2025, it allows you to avoid the 0.5% AGI floor. It keeps the full 37% deduction if you're in the tax bracket or whatever tax bracket you're at currently, and you still get to maintain flexibility in your giving schedule. In just a minute, I'm gonna go over some deadlines you need to keep in mind if you wanna deploy these strategies. If you wanna take advantage of the current rules before the change, here's what you need to know. First, you should check the cutoff dates. Different charities and DAF providers have different deadlines before year end to make contributions. If you're donating stock, make sure you give some time for stock transfers to clear before December 31st. Credit card charges must be charged on December 31st or before, even if you're gonna pay in January. And lastly, if you're gonna make a wire, we recommend giving at least 2 to 3 days, even though it can go quickly, just to make sure everything's clear on the bank side. Remember, the window to act closes on December 31st, 2025. So who benefits most from acting now? This strategy works best for people who regularly give to charity and itemized deductions, those expecting high income in 2025, business owners who had a particularly good year, anyone planning to make major gifts in the next few years, and taxpayers in the highest bracket. So now's the time to act if you want to maximize your charitable impact and tax benefits. Here's what to do. First, review your giving plans for the next 2 to 3 years. Then, reach out to your accountant to calculate potential tax benefits under various scenarios. Also, research donor-advised funds to see if it's a strategy that might be beneficial to you. Lastly, set calendar reminders for year-end deadlines to make sure you don't miss them. At Proseer, we're helping our clients navigate these changes with personalized tax strategies. If you'd like help evaluating your specific situation, visit our website at the link in the description to schedule a consultation before the deadline passes. The charitable deduction changes coming in 2026 may seem technical, but the bottom line is simple. If you're planning to donate to charity, giving before 2025 is up may save you a lot of money. Remember to like this video if you found it helpful, and subscribe to our channel for more tax and finance strategies to optimize your business and personal life. Thanks for watching, and talk to you soon.